Okay, here's our broader market update on September 8th. It's about 10:40 p.m. And so we have pretty much almost a full week of trading left. Tomorrow is our last day of trading on Friday. And we'll start with SPX. We'll zoom in on the daily chart. And if please, as always, take a look at the description, the links in the description. If you're not familiar with cycles analysis, there's a ton of content there to get you up to speed. There's a lot of jargon. It's just helpful for shorthand. So please take a look. I do these videos with the assumption that you're able to you've consumed that content. You're able to sort of understand it. Give yourself some time to digest it. It is a little dense. It takes some time to really understand, but it's incredibly powerful. This is how you time the markets. It doesn't mean you can time the exact bottom. That's impossible to do consistently. What you can do is recognize a bottom in hindsight and do that early enough to benefit from it. And this is your example here, right? So we have our potential daily cycle low here on day 54, September 6th. And so today was day 2 of the daily cycle. We assume we have another higher high tomorrow, day 3 of the new daily cycle. Now, notice I always say get more excited about the pullback than you do about the rally. So this whole downtrend, right? So let's starting here, right? That's when the S&P topped out here on the daily chart, January 4th. We've been in a downtrend, right? So we've been just making lower lows and lower highs, right? And we finally made that low that we've so far stayed above, which is at 36.36. And then we had this move up and then this like chop. And then we had this furious move up here, right? And notice we had this big, and I think, yeah, that's probably helpful. I'll just draw this. This is again. So we had this like consolidation here, like, kind of zigzagged. But then we went like this, and then this was a pullback. Get excited about that. Like, does it hold a higher low? And it did. It held a very nice higher low and then moved higher. And then you get another pullback. Again, something to be excited about. This was a little choppy mess. But then we go up here, and that was our top. And so then we came down here. Now, here's the thing. Let's be really clear about this. That was day 40. So this is day 41, 42, 43, 44, 45. If this had been our bottom, right? Like this could have been our daily cycle low here on day 45, August 23. That's really important to understand, right? Because as I talked about in the article, the weekly article, how the daily cycle low unfolds is really important. And so this would have been a bullish version of the daily cycle low if we bottomed here. And notice we did rally, right? Things always rally. That's the whole point. Whether they're going to make higher highs or higher lows, there's going to be a rally. In this case, it rallied for 2 days. It looked like, okay, so we got follow through, and then we got this big whammy candle, right? So we went like that, and then wham. And then we got pretty good follow through, and then consolidated a little bit. And now we're testing these levels, and I'll go to the futures, which are trading now, and it looks like we're going to gap up tomorrow unless things change overnight, obviously. But we're now doing something like, maybe here. Now, so it's a question of, are we going to go do something like that? Are we going to keep going, making higher highs and higher lows? Or are we going to top out, right? And to understand that, that's why we use multi-time frame analysis. We'll look at the weekly chart. So again, day 2 of a new daily chart, of a new daily cycle. But on the weekly level, we so far have our high on week 9, big swing high, below 42.1870. You have a swing high, like below the low of this candle, which marks the high, right? This is the S&P cash. Then you had massive follow through. In fact, this is a gap down, and on the way back up, you'd expect this to get filled, like to sort of vacuum up kind of thing. Then we had, so we had this, and then we had massive follow through again. So this is kind of your pattern of 3 down. Usually, I mean, this was a pattern of like 7 down. Like sometimes that happens. You have to be ready for that. But we then made actually a new low this week, below this low, and now we're reversing. As I can continue to talk about, that's the potential for an outside candle to go above the high for this candle for this previous week, right? So that would be above 42.63 basically. So and of course, again, we're probably gonna gap up tomorrow based on how the futures are trading. So it gives us higher odds of hitting that, and that would also get us closer to getting, or that would actually get us above the 10-week moving average, which might be a hint that so that's where things get interesting, right? Because then we have other hurdles to climb, right? We then need to get above 41.12, right? And then above this again, that 42, what was that? 42.1870 level, right below the low of this candle. So there's a lot of potential overhead supply, even though right now we are rallying, and that's important. You can still make money on this side. And if we go to the monthly chart, same pattern that's going on the weekly is developing on the monthly. And why is that? This is important to understand. It's because the month is early enough that the weekly candle is essentially the monthly candle. It's essentially the same, right? Because it's the same data. At some point they're going to decouple. You're going to have several weeks within a monthly candle. But right now we just have one week, and so it makes sense we have this pattern. So if you want to be uber bullish, if this played out, that would mean a move above that 43.28 level. That's your kind of line in the sand. That would tell you, okay, maybe we're headed back to new highs kind of thing. That would be before the end of September. That would be really interesting, right? I think a lot of people are positioned a little cautious. You have the Fed meeting coming up, and that's the other thing. You have the CPI print next week on the 13th, and then the Fed meeting, I think, on the 21st. So you have a lot of catalysts. It's going to be a question of how the market is trading, how they sort of turn it from there. But these levels are very, very clear. So we'll quickly look at QQQ and IWM. Same idea, day 2 of a new daily cycle for QQQ. In the case of QQQ, the move for the weekly would be above, 307.22. So another $7 on 300. Not terrible, especially if you can get a nice options play. And again, same thing. Possible fake breakdown on the monthly kind of thing. And then IWM, same idea, day 2 of a new daily cycle, week 12. Again, still trying to make that outside bullish week. That would be above 189 basically, right? And we're at 184 basically, just below that. So, and on the monthly, again, same kind of idea. I mean, wow, this was an incredibly bearish monthly candle, which means you could catch a lot of people. I'll zoom in on this one. You could catch a lot of people off sides, especially if we just kind of kiss the 10-period moving average here at what is that at? 193? Interesting. Very interesting. Right, so my point there is there could be a nice little piece of upside here, even if we're going to make another leg lower, which is what I suspect will happen because we're still in a downtrend on the higher time frames. But again, if we start making higher highs on the higher time frames, weekly, monthly level, well, that changes things. And finally, we'll just look at the Dixie really quickly because that helps to dictate things a lot. And it does look like we're getting that daily cycle high for the Dixie. I tweeted about this, and if you're not following me on Twitter, definitely take a look. And it does look like I mentioned we had our daily cycle high on day 19 because I do mention more real-time updates. We had a little bit of consolidation today and now with this candle for Friday. Now, of course, it's still very early, day 21. So we are making fresh lows, and now we're below the 10-period moving average, which is usually your signal that you're moving into a daily cycle low as well, another kind of signal. So now it's going to be a question of how extended is this daily cycle low? And I'll post a separate video about the dollar. But you can see how these, this was a very extended one, but this wasn't. So it'll be interesting to see how it kind of plays out. Because the weaker the dollar is, the better it is for stocks, generally speaking, I'll just say.